Hi, and welcome to today's podcast episode. I speak with Deniz Yasar about Terra Luna, Celsius, Three Arrows Capital, and a little bit about the market in general and also our experience we made over the last month. So enjoy the episode.
So I think I have a pretty funny story to that. 2 weeks ago on a Monday, someone withdrew 80 euros from my PayPal account, and I thought, oh well, someone hacked into my account, and I had the fear of someone just emptying my bank account because PayPal is connected to my bank account, and so I pretty much directly got into my phone, called PayPal, and said, hey, that wasn't me. Can you do anything about it? I had to prove them that. I had to prove that I will change my passwords, that my mobile phone is at me, and so on and so on. And they were so nice and kind of gave me my money back. And of course, 80 euros is not too much, but it was about having my money back. And at that moment, I thought, well, if this wasn't the blockchain space, there were no ways of getting my money back. And someone with another wallet would have been just sharing my Bitcoin with his friends. And I was happy to have a central instance which helped me at that moment. And yeah, these are the times where you can say maybe the old ways are the real ways we can work with, and the new ways are fancy and interesting, but not as effective and efficient as the ways we have at the moment.
On today's episode, I'm happy to welcome my first guest again, Deniz Yasar. Welcome.
Hey, Sebastian. Grateful to be here. Thank you for the invitation. And hello to the audience.
And since the first episode nearly got 100 downloads, I thought it is great to recap again with Deniz about our learnings about Web3 and our experiences in the blockchain sector, and also to talk about some news. And before we start, I want to give a disclaimer because we will talk today a lot about decentralized finance. And this podcast is no financial advice, no recommendation to buy or to sell. So always do your own research. And Deniz, maybe we can start with a light question or something like that. How would you describe your experience in the last 4 months in the Web3 space?
Yeah, well, 4 months. So the time has passed pretty quickly. And I think a lot happened. We had new highs, new lows. We're now in a situation where we can say that it can still go lower. We don't know. But I think it was pretty intense, and you kind of got the impression that the people and the atmosphere and the sentiment was very, very negative, and all the news were kind of received negative, especially with Luna, Terra, and all the other news like Celsius back last week. But how do you think all the things evolved? Do you think there's a positive sentiment or hope?
So I think from a regulatory perspective, it might also be a good thing. So of course, regulations are not always the best, but maybe later we can look at some of the things which happened. And there I would say regulation can definitely help sometimes. And I think also these market cycles are a little bit like cleaning cycles by scrubbing a lot of the dirt away, or showing which projects are solid and which aren't. And for example, as I was quite interested in NFTs, and I also said that this time I think over 90 or probably over 95% of the projects are scams. And I think this is something which now shows true. How do you think about that?
Yeah, I'm also in the opinion that 99% of the coins will probably vanish with time. Even Bitcoin could be, you don't know. But I think staying in the basics is the best part. And I find it pretty ironic that the people being involved with blockchain want a system without the government. But then if something happens, the government should intervene and help them. So yeah, I don't know about that. But then you can kind of get the impression that there are still people who have anger or are kind of scared of what can happen with their money, especially.
Definitely. And as it is our first beer market, I think a lot of the euphoria from the summer of last year, at least for me is a little bit gun, and also a little bit of this magic and of this narrative that crypto will change the world. And I think it will, but you have to really look closely. And I often think there is no blockchain needed for a lot of these spaces. And maybe talking about that, we can start with Web5, because maybe I can give a quick recap also for you, because I read a lot about this. I did a lot of preparation for this. And Web5 is like a term from TBD. It's like a Bitcoin focused subsidiary of Block, and Block was Square. So it's the company of Jack Dorsey, the founder of Square and Twitter. And they published a Google document about Web5. It's basically called Web5 because it's Web2 and Web3, and together they are Web5. I think it's just a marketing move because it annoys people. But I want to quote from the official document, and they describe it that the decentralized web platform enables developers to write decentralized web apps using decentralized identifiers and decentralized web nodes, returning ownership and control over identity and data to individuals. So it's built on top of Bitcoin. And as Mike Brook from TBD tweeted, there were no tokens to invest in their definition of Web5. And when I read now this definition, Dennis, what are your thoughts on this?
A lot of decentralized, and especially coming from Twitter, which is a platform run by like one man show. I mean, promises, you can just trust them. There's nothing to do about it. And if they kind of build a very effective and nice platform, that's good for users without giving away their data. But we have seen so many projects which kind of promise exactly that I'm kind of not surprised or not happy, because there are so many promises and a lot of them are not held. So I don't know what to think about it.
Yeah, I think it's also very difficult. And I once had an interview guest who was a software architect, and he said, okay, the web once was decentralized. And for example, we had all these different email providers, and somewhere, for example, at Gmail, others were at GMX. In Germany, a lot of them also use web, and all these different email providers. And it got more and more centralized about, I would say, at least in the Western world, around these big US tech companies who have monopolies in their space. And I think it's quite controversial to talk about these topics because I also work in the tech industry. But if you compare, for example, the market share of the Google search engine, or also about Microsoft Office products, or also about things in the Apple ecosystem and Facebook with WhatsApp and also Instagram, to other companies where, for example, M&A deals in the steel industry get cancelled because they argue that there would be a monopoly. I think it's at least you have to look at it critically. How do you think?
I think, how do you say it? There's no free lunch. I don't know why someone as big as Twitter or Jack Dorsey should build a free platform without having any incentive. And that's the first suspect point. And the second one is there are so many people, and if most of them will use the platform, somebody will come and try to monetize it. So either way, it's kind of getting ridiculous, and everybody knows that money is in the way, and money will result as the most evil thing in that project. But I mean, we have to wait, right?
Yeah, and the other one is, does the majority of the people really want this and really needs this? Because I think it's easy to criticize major tech companies, but from the level of comfort we are all receiving daily from Google, for example, and what they have done for us in terms of really democratizing knowledge due to their search platform, this is also like a major benefit. And if we really look at decentralization, it would be possible that people go to the not dark web but deep web, right, with the Tor browser and have more
Anonymity.
More anonymity in the space, right?
Yeah. So I've got some friends who also say they like blockchain, they like cryptocurrencies, but first of all, they don't want to be their own bank. That's the first big sign of, yeah, it's cool, but I like the way it is right now. And I don't know if you read the news, but DuckDuckGo and the founder also decided to censor a lot of stuff and a lot of topics, especially regarding Russia. And DuckDuckGo, for everyone who doesn't know it, it's like a search engine, but I want to say better than Google, because they don't censor stuff and they want to make your data also your data and not use it for against yourself. But if something like DuckDuckGo, which promises anonymity and so on, begins to censor topics, that's a big problem, because, okay, there's still one man deciding what to do and what not to do. And if it's the same thing with Jack Dorsey and the Web5 platform, I wouldn't be surprised, to be honest.
Yeah, it's very hard.
So Telegram was also known as the best messenger, better than WhatsApp, because WhatsApp is owned by Facebook, Meta, Mark Zuckerberg. And now Telegram decided to give their data to the German government. And that's the same case. If a company decides to just give the data away, then there's no responsibility, and it can happen. Like, so many things can happen that's so bad, and a lot of people will get in trouble. I mean, some people have to get in trouble, definitely, but a lot of other people might be in trouble which don't deserve it.
Yeah. And I think it's often the topic about Web 3 also, if we really want this decentralization. And I think a lot of people do not really care. I think a lot of people care also always about their own benefit, and they want comfort. And I think the current situation really gives them comfort, because we can use Instagram, we can use WhatsApp. We are not paying for these applications, at least not with money, but for example, maybe with our data or getting these targeted ads. But I don't know if the new systems will always be better. And I think it's the same with Web 3, right? When we look at DeFi, for example, all the people were talking about giving back to the people and establishing something completely new. And if you look about the insider trades in some of the reports, if you look what is really happening, I think it's not so far away from a deregulated Wall Street, maybe Wall Street pre the financial crisis in 2007, 2008, right?
Yeah. So also coming back to the topic of giving away your data, and there's no free lunch. You kind of give the incentive to give away your data as a customer. And that's also the thing with insider trading. You see a lot of news about, we will come to the topic, Terra, a lot of insider trading, and Binance, which is a platform. And if so many people are trading on it, somebody will come to Binance and say, hey, can you sell us the data? And they will say, yes, we'll do anything for money. We are money. And then you can definitely see that those people with money will win and the other people will lose. And in blockchain or in the cryptocurrency industry, all the people say, oh no, we want them to flourish and go away. But in the end, it's the same kind of people. They will sell their grammar for money.
Yeah, oftentimes it is. And even reading the book of Laura Shin, I think she is called, the senior editor of Forbes, and she wrote a great book which is called The Cryptopians, Idealism, Greed, Lies, and the Making of the First Big Cryptocurrency Craze. There are also stories of insider trading and a lot of things where you would say, okay, this shouldn't happen with a blockchain, and is it really so decentralized? And also that single points have like huge influence on the network. And maybe we can talk about a little bit of these DeFi topics in detail. can you maybe recap for the audience and also for me how the Terra Luna Crash worked, and maybe before, I think it might be easier to understand how did Terra Luna work?
So Terra is a blockchain on its own, so nothing to do with Bitcoin or Ethereum. And with that blockchain, they have a stablecoin called UST, and of course their own native coin called Luna. And what they do is they try to incentivize the people to always keep in mind that one UST should be $1. And what they do is, if one UST is worth more than $1, then you can just buy in UST and change that for $, for a profit. And if one UST is worth less than $1, you can burn your Luna and receive UST instead, and then change that again. And these arbitrage possibilities try to incentivize all the people being in the Terra blockchain to always make sure that one UST is worth $1. And that's called pegging. And what now happened to Terra is it kind of got into the spiral, to the death spiral, that one UST was worth less than $1, but instead of arbitraging it, they kind of made it worse, and then the UST was worth 60% of $1, and it got down bad, and then in the end it depegged, and that was the reason why everyone sold their UST, sold their Luna, the price crashed. And of course, the Terra Foundation, led by Do Kwon, everyone can look him up on Twitter. They had to make sure that their foundation has enough liquidity to provide it on their decentralized exchanges, liquidity pools. So they had to sell their Bitcoin. I don't know how many Bitcoin they had or they have currently. I think there are 10,000s of Bitcoins. Their market cap was around 40 billion, I think. Correct me if I'm wrong. Now they're literally at zero, I think. And so they had to sell their Bitcoin. And of course, this led to a pan sell-off in the whole market. And the price of Bitcoin also plummeted. And that's kind of shortly how everything went in the last 2 weeks or 4 weeks now.
Yeah, it's crazy. So maybe also important for the audience is that Terra, so UST, is the Terra, it's the stable coin, and it's an algorithmic stable coin. So as Dennis said before, but I think it's very important to put emphasis on this, because it doesn't mean that every stable coin could as easily depeg from its value as in this situation. And there are a lot of theories how this could have happened. Some of the theories is that there was something like a George Soros attack. What do you think about these theories?
I mean, if the audience is on Twitter, you heard a lot of rumors, a lot of theories, and the view I have is it was something with insider trading or something in Terra. The foundation happened because a lot of people were tracking the wallets and the transactions. And as the audience knows, the blockchain is transparent. You can definitely look up everything you did, you will do, or you're doing right now. And so a lot of wallets kind of led to Do Kwon, the founder himself, how he kind of withdrew so much money, hundreds of millions, and to different wallets, tornadoed it, and so on. And so this was the reason I thought, okay, it has to do something with Do Kwon. Of course, a George Soros attack could also be the case, maybe from inside again. You don't know that for sure, but I know that the SEC is fighting up against Do Kwon and the foundation, and also a lot of people kind of got the impression that in the Terra Foundation, they knew what was coming, and a lot of interviews, Do Kwon also said, yeah, we want to build up something and go to zero again. So a lot of suspect points and arguments. But what do you think about it?
I don't know how it exactly happened. I think there are a lot of rumors, and it's hard to being concrete about that. But what I think, which can be definitely be told, is that Do Kwon become quite confident about himself. I would even say he become arrogant, calling other people poor who criticize his project. And I think this is something which we see often in the crypto space, but not only in the crypto space. I think it's often that we have quite smart people, but at some point they are becoming in a state of mind where they think they are like invincible, and they are thinking, okay, now they are the next half god or something like that. And I think even if they are very smart, like on a Bill Gates level or Elon Musk level, I think even that those two are not always right. And there are definitely situations where they also miscalculate something. And I think it is crazy also how it affected the whole market, because Bitcoin, I think in this period of time, I don't know, like after the Terra crash went down 30%, and also a lot of the other altcoins went down minus 50%. And Professor Sandner said something great about that. He also said, as you as you quoted also before, there is no free lunch. And Terra, for example, also offered, I think, 20% yield on their stablecoin, or was it on their stablecoin or was it on Luna?
I'm not sure.
So at least you could get like 20% yield if you're in the ecosystem. And I think if you
constantly.
If you have these high yields, there's always high risk involved in some way or the other.
I mean, they even promised 20%. Promising 20% is pretty absurd, especially if you look at the non-decentralized finance, and to give perspective on the arrogance aspect you mentioned. I think 2 months before, or in January, Do Kwon was on Twitter and had a discussion, or let's say a fight with someone, and they said, okay, well, I bet that Terra Luna will exist in 1 year from now. And the other person said, no, you're a Ponzi scheme. So they bet $1 million each, put it in a smart contract, which was managed by someone else who made it. And then someone else came in and said, hey, I want to bet against Terra too. Kind of shorted it, right? And then Do Kwon said, yeah, let's do it. And they put around, I don't know, 25 million?
10 million.
Okay, together 20 million. And it's so much money. And they just bet it like it was nothing. And Do Kwon was very confident, a little bit too confident, I'd say. And then you knew, okay, he's pretty sure about it, but he should have known from the inside that that's not going to happen, because Do Kwon himself knew what was going to happen if he does what he pretty much did then.
Yeah. So I think this is the next problem, that we don't know what is going on. Mm-hmm. And this is a little bit like in Wall Street. And I can say you in the financial markets, as like a private investor without the research capacities of like a hedge fund or something like that, the chances are high you don't know more than the financial experts. And even if a lot of the hedge funds do not outperform, let's say, the S&P 500, I think it's even harder in the crypto space, right?
Yeah. So I read a lot of articles about how developers of each project, kind of venture capitalists, go to the developers and ask, oh, how do you do that? And then they get in a conversation, and from now on, it's just insider trading, because the developer can say what they will do or what kind of went wrong, and the venture capitalist could just short it or long it, how they feel. Mm-hmm. And that's pretty much the most prohibited thing in the financial markets you could think about. Mm-hmm. But since there's no government or nothing to do about it, and no real securities, if it's a new coin, then of course there's no one to watch out, and this kind of gets a big anarchy.
Yeah. And it's so crazy, because it's normally forbidden, but for a lot of these, let's say, crypto assets, it's currently not forbidden. And there were cases where like venture capital funds participated in, or hugely participated in, an airdrop of a company in which they invested in, and they created all these wallets receiving the airdrop. And even if you go back to Ethereum and Ethereum Classic, I don't know, I don't think it happened, but there were like major insider trading opportunities, at least, and also offers some of the stakeholders received about doing this kind of stuff. And I think it's just I don't know if it's even better than the current financial system because it's so unregulated. And of course, there are also participants of the old financial system which use this. And at least as a private consumer, you might benefit from crypto if you might make buy and hold. And I think it's the same in the current financial system. I think probably 99.9% of the people will not get an edge by trading something, but they might get an edge just by buying a company and making classical value investing. And I think this could be something which works.
Yeah, you mentioned it. I think it's not a new financial market. It's the same people. It's the same people with new technology trying to cover their faces up. I know I speak a lot about Twitter, but I think it's the best source for every information you can get about the blockchain industry. And there's one man called Fatman Luna, I think that's his ID. And he came up after all the Terra things happened and Luna crashed and the foundation came up with the SEC files, etc., etc. And this man has to be from Terra himself because he has so much information and with so much detail and sources. And he also talked about how Alameda Research, that's FTX, that's the quant team from FTX, kind of had a deal with Do Kwon and the Terra Foundation, how he will receive money from them, but promises them a few hundred millions lunans for that, and how he had a deal with Binance and etc. So I don't know what's happened, of course. I mean, I'm sitting here in another country, but I'm pretty sure that a lot of these things are true. And from the financial markets, if both of the parties can profit, they'll just do it. They won't give a flying duck about what regulators will say.
It's crazy. And I think what is also crazy is that I almost only see the SEC going after these cases.
Yeah.
And of course, they can do it because America is, let's say, the most influential nation, or at least at the moment. But I think this is also a problem, right? Because you have America taking care of the whole world, and you can criticize the US for a lot of things, but I think in this way they are looking out for a lot of people, and also they have bounties on the Monero system, and they really want to see how this works, and they want to get these informations, and they want to see if any criminals use it for money laundering and also other criminal activities. And of course, I wouldn't say that other regulators are doing nothing, but they are doing far less than the SEC. And it's like a little bit like the police for the world. And it's even hard because in this decentralized system, it's not so easy to get the responsible people held accountable, right?
Yeah, and with new head, or currently not new anymore, but Gary Gensler from the SEC, you have someone with big knowledge. I mean, he had this presentation at the MIT about blockchain. And if somebody like Gary Gensler has so much information and knows so much about it, I also get suspicious that he might be also involved in something. You don't know that. You can just be sure that they follow all these troubles and things like Terra. But if someone from the SEC is involved and is insider trading, it's just coming back to the financial markets. I mean, you have so many examples where people from the US government also had insider trading. Nancy Pelosi, right, if I remember correctly. And I mean, it's a big, big anarchy at this point, and you have to trust them, and you can do nothing about it.
Yeah. It's hard. And then we have to ask ourselves if we really want decentralization and anarchy. It always comes down to this question. And even if I think innovations are great, there are only few examples where we see like decentralized innovation benefiting really the majority of people. And for example, also open source innovations, which are really able to be competitive to, let's say, the tools of big corporations. Take, for example, Linux or Linux. I don't know how to say it in English, for example, and compare it with the Apple operating system or with Microsoft. And I think at least for the majority of people, Microsoft is the best, or Apple, the Apple operating system is the best operating system. Okay, now a completely new debate, but you know what I want to say, right?
Yeah, absolutely.
Oh, and it's a little bit frustrating for me because, of course, there's a lot of euphoria and thinking about these topics. I, for example, get quite skeptical, and I think a lot of the projects just have good marketing in the space.
Yeah, I think the marketing is kind of the most profitable way to kind of publish your project, your coin, whatever. And you see that there are a lot of good projects. I don't want to diminish them. And they have so bad marketing that, okay, this won't be anything. And there are so much bad projects which have such a good marketing that you can just blindly invest and say, wow, there are so many people who will invest in it that this Ponzi scheme will profit me. And it's in a bad way funny, but it's kind of pretty hilarious.
Definitely. And I think also, from my current point of view, it will get more optimistic in the future. But I think it's always this cycle where you have like these high expectations and maybe also thinking, wow, this could change the world totally. And it's a little bit like the hype cycle, right? And then you notice, okay, it doesn't work like that, and there are a lot of empty promises, and after a while you will see, okay, there are some use cases where it's really good, and there are other use cases where traditional solutions will probably be better. And in the end, I think it's very interesting to see what is going on. And even from a podcast perspective, like from a journalistic perspective, even if I wouldn't call me like a journalist, it is great for me because it always happens something, and there's a lot of topics to talk about.
Yeah. It's sometimes I wish I would be a journalist living inside of the industry. You can't keep up with the information. I mean, you can be every day, the whole time, all night long on Twitter and still miss something. You have to have the right sources and kind of get the impression of what is right, what is wrong. But from a retailer perspective, from normal perspective, from a normal working perspective, as we do, you can't keep up, and you have to kind of get the impression from YouTube or whatever. So difficult, but still very interesting and fascinating.
Yeah, definitely. Maybe we can talk also about Celsius, which is, let's say, the last recent scandal in the scene. And can you also maybe briefly explain what happened with Celsius? And maybe before you say what happened, maybe what they are and what they did or what they do.
So I think you have more information about Celsius than me, but I kind of try to quickly explain it. Celsius was a platform where you could just swap coins and also kind of get your yield, your API, high APIs in the year. And what they did last week is they kind of from nothing stopped the withdrawals on their page. So many people had their coins on their page, of course, not your keys, not your coins. And the people kind of were terrified. Of course, I mean, if you don't have your coins, your money is pretty much in the air at that moment. And then people ask, oh, what happened? Was there a technical difficulty? But there were also the rumors that Celsius kind of was insolvent. So they had no money. They just weren't able to withdraw it because they probably had no coins anymore. And they just promised their customers that their coins are safe. But maybe you could explain more how things evolved and what they exactly do.
Yeah. First, thanks for your explanation. And I think you said a lot about Celsius. And maybe for all of you, Celsius is like a crypto lending platform. It's like a DeFi platform. And they had also very attractive yields. And as of my understanding, Celsius offered these yields, and they were investing your assets on other platforms. And there are also, I think, I don't know if I had like a very solid article, but there are like quite good evidence that Celsius lost money with Terra Luna also. And other claims also said that Celsius is partly responsible for the Terra Luna crash, which on the other hand, Celsius denied. And main thing to say is, of course, there's not very good public information, but a lot of theories, and it's very hard to now say what really happened. But what you could really say, or what we also have seen, that they just suspended all the withdrawals from the lending platform due to the extreme market conditions. And one theory is, of course, they have assets but no cash flow, which means they just couldn't pay out. But even if like a crypto lending platform like Celsius cannot pay out their investors, it's insane, right?
Yeah, I mean, if they can't deliver their promises, it just sounds like a big Ponzi scheme. If they receive money and can't even handle something like that, I mean, it's like a big bank run. People want their money, but they're not able to deliver it. And I mean, that's the same principle as the real world. If there was a bank run, I think a lot of banks would have troubles. And coming back also to Terra Luna and so on, there are a lot of words about having 9 to 10 figure losses. I mean, that's billion. That's so much money you can't even imagine it. And with 40 billion market cap of Terra, there had to be parties which have lost a lot of money.
Yeah.
I don't know if you know Jump Crypto Traders. That's also a hedge fund, especially for crypto in America. I think they're in Chicago. And they also lost so much money that you kind of think about it. Well, is it a question of time when they kind of get bankrupt? Because someone had to lose that much money. I mean, there are so much retailers invested in Terra and blockchain and space, but not that much that it gets to 40 billion. So they had to be big players which lost everything. And one of them was probably Celsius.
Yeah. And the problem is they are also interconnected, right? All these financial companies are interconnected. And I read something very interesting from Dr. Julian Hosp. He's like a major German crypto influencer, I would say, or maybe educator or something like that, and also like an entrepreneur. So he's the co-founder of Cake DeFi, and he says there's something like a mafia in the crypto space, which might be a little bit populistic, but yeah, so I think with the insider trading going on and all this stuff, now the thing is, I don't even know if we could call it insider trading in the crypto world, but in the traditional world, it would be insider trading. But he said something like that there are 3 major institutions and they are working closely together. And once you're in, there's no way out. And so his company, Cake DeFi, got also very attractive offers from them. And the deals always had to do with Tether, and they also had to do with Bitcoin lending. And now reading about Celsius and all the stuff going on, I don't know who is involved in this kind of stuff, but it definitely looks like there will also be other market participants affected, right?
Yeah. I mean, you have the big players: Coinbase, Binance, FTX. Yeah, maybe Celsius, but they're not as big as FTX, Binance, and Coinbase. And they also have their own stable coins with BUSD, USDC. I mean, FTX has no one, but I think they have their own coin. And so if there's a kind of discussion about who want to conquer the market, of course they will do anything, because anything sounds like, oh, more money, and it is more money. And someone will just vanish from the market. And from all the centralized platforms you see, I'm sure that not all of them will exist in 5 years, because something will happen to them. And Terra wasn't the last one which kind of crashed. So they will have a lot of problems. And I'm sure that we will see why Celsius kind of got into trouble. And we'll also speak about 3AC in a moment. But it's a pretty exciting time to see how many people kind of lose their money. And money doesn't just vanish. I mean, it just changes hands, right?
Yeah. So I think the three institutions are not the ones you talked about. I think these are other ones. Dr. Julian Hosp meant, because I think they must have a stronger exposure to Tether than, let's say, Coinbase has. But he also said he doesn't want to name names because he didn't want to get in any trouble. And talking about what happened, there's often these crypto lending is often seen as unregistered securities. And this is also why Coinbase had to shut down its own planned lend product due to regulations, or at least what the SEC said. And we are always coming back to things like regulation and insider information. And the thing is also where I'm thinking a lot of recently is, since Peer Chemist told me how updates on the blockchain work. Let's say the humanity lives forever. So there's no like extinction event where maybe an asteroid hits the Earth, or let's say we are all killing each other or something like that, or like a plague or pandemic or something like that. It doesn't happen. And you have like a blockchain. How high are the chances? Let's only take 100 years. If we go back 100 years to the year 1920 and see how much has changed, also in the monetary system with the gold standard and all this stuff. Let's now take also like a very stable blockchain like Bitcoin, and then imagine going 100 years in the future, and you will have probably updates to the blockchain, because when the 21 million Bitcoins are mined, chances are high that there will be updates to the blockchain. How high is the chance that at some point there will be some flaw in the code or something like that, which will not be seen, and which is like a 0 day exposure, or how you say it, like maybe 0 day is to the wrong word because it's not from the first day, but let's say there's a security issue in the blockchain at some point of time, and coders will not see it because it's very hard to see. And I think at some point of time it will happen, because we saw it with Log4j, and we see it all the time with other updates being implemented by major companies. How do you think about that?
I mean, you can just do it like Vitalik Buterin and hard fork the chain, but that's not really a solution, and also against the principles of blockchain. I don't know what to say, because I think it's pretty. We are so blind looking forward in 100 years. I mean, 100 years going back to the 20th century, we didn't even have any planes. So now we're flying like it's nothing. And you don't know what's in 100 years and how the monetary system changed until then. And calculating it from now, I mean, yeah, there will always be flaws, bugs, any mistakes in the code. You will have a lot of coders and developers, of course. They will just the number of them will increase. But then you have to question, let's say it's Bitcoin, will the Bitcoin blockchain be the only one which kind of held through, or maybe Ethereum? You don't know it. Now it's Bitcoin, but what if something happens to Bitcoin? And all the people wanting them to be more than 21 million say, okay, let's hard fork them. And then you have kind of two religions living their separate lives. I don't want to kind of estimate how it will be in 100 years, but I think it will be so much different than now that it's pretty funny to look at that podcast now and say, oh, how did they thought about it?
Even if you look back now, like maybe 10 years or something like that, and you see like, okay, there was already Bitcoin Cash and the stuff, and maybe it wasn't so successful, but I think it does not mean that in the future other forks will not be successful. And the major thing which I think in the crypto space, which is sometimes missing, is like the value add, the value creation. Like you have something and you really have to ask yourself, okay, does it not already exist, or where's the value being added to this? And if you have, let's say, 10,000 cryptocurrencies, how many of them are really innovative, and how many of them are really better than the current solutions? How many of them have like better approaches than Bitcoin or Ethereum? And okay, you could say Ethereum with the gas fees, it doesn't work, or it doesn't scale, but how will it develop when Ethereum will be updated? And of course, this is a long process and it should be made for a long time. But do other blockchains really scale, or didn't we see like also high gas fees in the summer of 2021 of a lot of these blockchains, which made a lot of promises about having better solution to scalability, and in the end they couldn't deliver up to their promises?
There's so much room for failure, especially with Ethereum and their way to proof of stake. And a lot of people are taking it for sure that that will work and everything is fine. Ethereum will be the greatest of all time. But I think there's so much room, as I said, for the possibility of having a bug or mistake in a code. I'm not a developer, but it's so difficult. And they talk about it as the most complex technical thing humankind has ever done. So you shouldn't always take that as a guarantee. I mean, even Bitcoin can fail and nobody will talk about it. And all these coins say, oh, we have solved the trilemma of decentralization, security, and scalability. But in the end, it always comes down to the same problems and they just go down, and developers change teams. It's such a big room for anarchy, as I said it, that you're not allowed to guarantee anything.
Yeah, and the next thing is talking about anarchy and the stuff. There are a lot of people who really like this idea of anarchy, but the question is, will you be the one who's profiting? And I would say, in a lot of cases, if you're currently not in the top 1%, or I would go even higher and would say 0.1%, you're probably not the one who is profiting from anarchy, because you're currently protected by the current system and it is not so bad. And the truth lies always in between. As I said before, I would say I'm currently just a little bit frustrated because it's also my first beer market and I also was a little bit hyped. I always said there's a lot of scams in this space, but I was of course fascinated by the idea. But the truth will probably be in the future that it will be something in between, and public ledgers will hopefully have their use cases and also their value add, but in a lot of the cases, they will not have it.
I mean, public ledgers are not something new. I mean, I think the New York Times was the first one and have the longest chain until now. And I'm sure that the technology will kind of keeps going until, I don't know, until the extinction, as I said it. But you don't know if cryptocurrencies are something we'll keep our mind on, because of course they will need a game theory point of incentivation, running the system, running the nodes. But now it's just monetization and trying to profit from each other. Nothing more. Everyone says they love the technology, but in the end, everyone is here for the money.
Yeah, it's also how I got into the space, or really got into the space, because of course I was interested in the technology, but I'm interested in a lot of technologies, and I just decided, okay, I will dedicate more time to the blockchain technologies because there might be the opportunity that I can make some money. And this was what really got me there. It makes you think, right?
Yeah. So the first touch point I had was, of course, money with blockchain. I knew, okay, let's start investing. It doesn't hurt. But with time, I got even more into the technology part, and then my money part went away. And with time, of course, the money part came back again. And with the bear market, you also question yourself, well, was it right? Was it wrong? But you will also have to tell yourself, if you bought at the highs and now it's the lows, was it even the right decision to buy in the first place, even if it went higher? And for myself, it was, yeah, I mean, I'm fascinated, I'm interested. I will keep reading articles and a lot of sources about it. But if you're not the right one, if you say you're only here for the money, you have to take the risk for yourself. There's no guarantee.
Yeah, at the moment, I wouldn't say I'm only in for the money, because I think there's much more around it. And I'm also quite interesting just because it's such a quick moving space, and also from a technology perspective, what is possible. But this is the thing which I think there's a high probability that there is not so much possible. So I think there are few use cases where distributed ledger technologies and a blockchain. So okay, now I have it. So there are two things which I learned in the course, and the first one is that blockchain technologies can reduce the cost of verification, and this is of course interesting because you can really say, okay, this is your property, or this is the artwork of people and stuff like that, or maybe even talking about digital identities. This is your identity. And then next one, or the second aspects where blockchains are really good is like solutions to the last mile problem, or solving the last mile problem. And it means like replacing the intermediaries in transactions or stuff like that. And I think if these aspects are fulfilled, there might be great use cases, but oftentimes they are not. And oftentimes, if I really believe a company is legit, for example, Google or PayPal or something like that, and I trust them, I do not really need something else, because if I trust PayPal, for example, I can always make my transactions over PayPal. And if something goes wrong, you can have even this option, right, where you trade with merchants on the internet, or something, where you send them money. And if you don't get your goods, for example, you can reclaim back your money. And
so I think I have a pretty funny story to that. 2 weeks ago on a Monday, someone withdrew 80 euros from my PayPal account, and I thought, oh well, someone hacked into my account, and I had the fear of someone just emptying my bank account, because PayPal is connected to my bank account. And so I pretty much directly got into my phone, called PayPal and said, hey, that wasn't me. Can you do anything about it? I had to prove them that. I had to prove that I will change my passwords, that my mobile phone is at me, and so on and so on. And they were so nice and kind of gave me my money back. And of course, 80 euros is not too much, but it was about having my money back. And at that moment, I thought, well, if this was in the blockchain space, there were no ways of getting my money back. And someone with another wallet would have been just sharing my Bitcoin with his friends. And I was happy to have a central instance which helped me at that moment. And yeah, these are the times where you can say, maybe the old ways are the real ways we can work with, and the new ways are fancy and interesting, but not as effective and efficient as the ways we have at the moment.
Yeah, it's also talking about mistakes or help from somebody. It's also when you have like a fat finger or something and you mistype something in a wallet address. And there are cases where people lost millions because they sent the money to the wrong address. And of course, in the traditional financial world, there are sometimes also these high sums of money where somebody transfers to another bank like 500 million or some crazy sum of money, and it's because it is a mistake. And even there, it sometimes happens that the other bank does not want to give the money back, and they are more likely to pursue a legal case because it's of course a huge sum of money. But normally, at least for the consumers, I would say we are quite protected by the system if you use the right applications, which can be trusted.
Yeah, for sure. You talked about fat fingers. I mean, we had so many cases in the financial industry where someone just bought something for $100 million because they did something wrong. And yeah, I mean, you can still do the legal thing in the end. There's always the possibility. But in the blockchain space, it's a one-way ticket. And if something bad happens, or if you send your coins to the wrong address or the address is wrong, then nobody receives it. It's just gone. It won't come back. And I don't know if that's a good thing for the normal retailer or the normal people which aren't in the 0.01% of the richest people.
Yeah, definitely. And maybe because we talked for a while now, coming back to Three Arrows Capital, can we finish the episode with maybe the rumors you heard on this topic?
Yeah, quickly after the Celsius rumors, people started talking about how 3AC, another managing fund, had the problem of a lot of people not only leaving, but also their liquidation and the fact that they had no capital anymore. These are pretty much rumors which are really not secured by any sources. There were only people who said on Twitter, "Oh, I talked to a lot of people from 3AC," and one of the co-founders, Ju Su, I'm sorry if I'm mispronouncing it, also deleted his Instagram account the same night. There were no updates, and you kind of the grain of salt, of course, you don't know for sure. But if that's also true, then there's a question if that's kind of causing a liquidation wave, or if more funds are coming and will just bankrupt themselves. But did you hear anything about it?
Only rumors. I would say only rumors. What I think you could say is that Terra might have influenced Celsius, and that Celsius and Terra also might have impacted Three Arrows Capital. And that is a little bit like the Lehman crisis, right? Where you have like one bank and other stakeholders are also affected by the crisis.
So I think, without being involved too much, that there are not a lot of stakeholders, but there's a hand of people who are invested in a lot of projects and a lot of companies. And if they kind of have the negative sentiment of the market and receive a lot of bad information, they will just withdraw from everyone they know. I don't think they have a favorite, or they might have, but they might be just reducing their investments from all the sides. And if those investments are important for their company, or let's say for Celsius or for 3AC, and they can't live without that investment, yeah, that will just lead to a self-fulfilling prophecy that the company will go bankrupt. And I don't know how many of those people are invested or how much money is involved, but you also don't know how much of deals are going behind your back and under the hand. So you always have to keep in mind that the retailers also have money, but that's not comparable to the real investments people make in the background.
Yeah, definitely. I think these are great words to finish this episode. I hope that in the future I will be more optimistic. It's maybe also a little bit dependent on the mood and also on the beer market, because it's our first cycle, and maybe a lot of crypto OGs can relate to us, and maybe they have felt the same about 2018 or something like that, or 2014. And I'm always happy to connect. I will also put in the Discord link into the description. Also funny talking about Discords and the hacks, because Dennis noticed me on one day that one of the Discord users got compromised. He was like sending in these fake links in every channel about buying Discord Nitro very cheap. But I think it's kind of funny that we have like a Web3 Discord server, and with only, let's say, 24 or something, or 22 participants, this happens to a Web3 Discord channel, because in Web3 there are also a lot of Discords getting compromised and a lot of projects getting compromised and stuff.
Yeah, a lot of security breaches and so on. But well, the next time we see each other and talk to each other, there might be the next bull run. So better mood, right?
Yeah, hopefully. So let's stay positive, everybody out there. I will put in a lot of information in the show notes, and thank you so much, Deniz. It was nice to talk to you again on your thoughts, and I hope we can continue this every few months and catching up with our views, and maybe also seeing how it evolves. And I think it's also interesting to see if we are going to stay long term in the space, right?
Yeah. The pleasure was on my side. Thank you for the invitation. Now just laugh. You don't know what happens in 2 years, but I think we have to be fascinated and stay curious.
Yeah, stay optimistic. Thanks for listening on today's episode. If you like the podcast, you would really help me by recommending it to your friends, because the thing is, podcasts don't get really any organically reach, and I'm reliable on the community to build a community. And yeah, I would really love if you maybe have someone who's interested in Web3 and also listens to podcasts, if you share this podcast with them. I'm also always happy for feedback, so the best way at the moment would be probably over LinkedIn. So maybe you have some recommendations for me. Until then, have a nice day. Cheers.